Some indicators were being counted as reason to project Indonesia economic growth in 2020. Some indicators or some predictions already published. And right now we're going to see some of the prediction on Indonesia economic growth in 2020. Yes, this is the Indonesia economic growth projected by some parties. The first one, of course, this one is based on 2020 state budget scenario. It is projected in 2020 Indonesia will reach the economic growth as much as 5.3%. ADB, Asian Development Bank, predicted Indonesia will reach 5.2% in its economic growth, IMF 5.1%, and World Bank 4.5%. Indonesia's economy headed into 2020 with sluggish outlook as household consumption, exports, and investment are expected to further weaken due to global economic risks, including the coronavirus crisis. Statistic Indonesia, or BPS, said gross domestic product, or GDP, grew 4.97% in the fourth quarter in 2019, the weakest level in almost 3 years. Throughout 2019, Indonesia's economy grew 5.02%, the weakest since 2015. Bank Sentral Asia Chief Economist Deffid San Opel said that gross domestic product could be adversely affected by the impact of spiraling coronavirus crisis, calling the government's economic target of 5.3% as unrealistic. And there are some domestic challenges in achieving Indonesia's economic growth in 2020. Let's see the data. This is domestic challenges of Indonesia economic growth. The first one is the rise of public health insurance premium, or BPJS we call it. And then the second obstacles or challenges, or the challenge that Indonesia might face in this year is decreasing energy subsidy and the hike of cigarettes excise. And decreasing energy subsidy and the hike of cigarette excise will certainly have a direct impact on people's purchasing power. Household spending, which accounts for more than half of GDP, grew by 5.04% last year, stagnant, compared to the 5.05% in the previous year because of lowering vehicle sales. Household spending was pressured in the fourth quarter due to a change in consumer behavior and rising informal economy, which led to some having uncertain income. Thus, it resulted in weaker purchasing power. Government will need to provide incentives to fuel sluggish household consumption growth, such as by boosting its social spending and increasing the threshold for non-taxable income. From domestic challenge, we are going to see the global challenges of Indonesia economic growth in 2020, and that is about Indonesia's trade deficit. Let's see the next data. This is the historical data of Indonesia trade balance from 2012 to 2018. As you can see, in 2018 and 2013, Indonesia experienced deficit as much as 8.57 billion US dollar, and in 2013 as much as 4.08 billion US dollar. In other times, for example, from 2000. In 2014, also Indonesia experiencing a trade deficit. Meantime, for another year, for example, from 2015 to 2017, the trade balance of Indonesia experiencing surplus. President Joko Widodo, in the end of 2019, once expressed optimism that the current account deficit and trade balance sustained by Indonesia for decades could be settled within 3 years, which is in 2023, as long as the country focuses on the downstream and industrialization programs in the mining sector. The president reiterated that the mining exports substantially contributed to the country's trade balance, but as a result, the domestic economy became dependent deeply on it. So he called on business players to no longer export raw materials but process it first into ready-to-use or semi-finished products. Moreover, Joko Widodo assessed that Indonesia could immediately wipe out deficits as long as it is capable to process or of processing other mining commodities, for instance, processing coal into LPG, methanol, until petrochemicals. Global economic growth intensely affected Indonesia economic growth, and to see the trend of it, let's see the next data. This is global economic growth from 2018 to 2020. In 2020, of course, it is projected to only reach 2.5%. In 2019, 2.5%, and in 2018, 3%. IMF shared a little bit optimism on global economic growth. Global growth is projected to rise from an estimated 2.9% in 2019 to 3.3% in 2020 and 3.4% for 2021. The downward revision primarily reflects negative surprises to economic activity and a few emerging market economies, notably Indonesia, maybe India too, which led to a reassessment of growth prospects over the next 2 years. In a few cases, this reassessment also reflects the impact of increased social unrest, stronger multilateral cooperation, and more balanced policy mix at the national level, considering available monetary and fiscal space are essential for strengthening economic activity and forestalling downside risks. Building financial resilience, strengthening growth potential, and enhancing inclusiveness remain overreaching goals. In the meantime, what are the list of global economic obstacles that probably will affect Indonesia economic growth in 2020? Let's see the next data. The first one, of course, the trade war between US and China and Japan and South Korea, which is maybe slightly will happen also in 2020. The second obstacle that will hinder or limiting Indonesia's economic growth in 2020 is geopolitical conflict in Middle East, and the third one is consequences of Brexit. Finance Minister Sri Mulyani Indrawati said Indonesia was not significantly affected by the trade war between the US and China, considering the country did not directly participate in the global supply chain. On the other hand, Indonesia will be difficult to earn advantages from the trade war because of its position. In other words, countries taking part in the global supply chain will take more benefits, including Vietnam, that experiencing hike in economic growth. But Sri Mulyani added that Vietnam became highly dependent on other countries' economy. Besides Vietnam, another big country such as China shared the same condition. Therefore, many countries are striving to reduce the impact of the trade war by enhancing the intensity of bilateral economic ties. And all the best for Indonesia economic growth in 2020. Stay tuned because we'll be right back, of course, in Market Headlines.